Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and welcome back to the podcast. Thank you very much for being here. I appreciate it. All right, today we are going to talk about more myths. We are hitting, if you have not hit the first 20, I have 3 other episodes with myths, and then this is going to be the final, unless, of course, I come up with some more because I'm hearing them all the time. So let's get into myth number 21. Life insurance companies don't pay claims. Oh, for the love of Pete. You guys, I don't know where this came from. I have never heard of a life insurance company not paying a claim. I have always heard of insurance companies going above and beyond to pay a claim. I actually just saw something the other day on the TikToks, and some lady, her mom passed away, and she did not have the life insurance paperwork. And she was talking about how, they just want to get out of a claim. And so nobody is telling her if her mom had life insurance and they just want to get out of a claim. Insurance companies cannot get out of claims. There are databases, and I believe it's every 90 days. I'd have to check to be sure, but I believe it's every 90 days. They have to go through the database to see if somebody has passed away. If that person passed away, and there was death benefit, then that goes to unclaimed property for every state. So if you've moved around a lot, or if you've lived in the same state forever, you can go online. You can search unclaimed property for your state, and you can see if there's money out there for you. I've done this just on our own in the past, and PayPal apparently owed me money for something, and that was an unclaimed property. I filled out a form, got the money back. My son had unclaimed property. We had about 2 or 3 family members that had unclaimed property. So, companies don't try super, super hard to find you. But if you are a beneficiary of a life insurance policy, all they have to go after is what was on the form. And if you've moved, if they can't find you, then it's going to go to that state for unclaimed property. They're not sitting on a bunch of money, and everybody thinks, they're just getting rich because they're not paying claims. Oh, come on. Let's find something else to ruin our day. That is minimal. It's not minimal if they don't pay, but it's most likely not going to happen. Number 22, premiums will increase. Premiums do not increase when you are talking about whole life insurance. And so when we are talking about just the base piece of the policy, the part that buys whole life death benefit, when we are talking about the piece that buys whole life death benefit, that is not going to increase. It does not increase. It stays the same throughout the entire life of that policy. You will see premiums increase if you have term insurance, if you have universal life insurance. Some of those increase. But when we're talking about whole life, the piece that buys whole life does not increase. When we are talking about paid up additions riders, that does not increase. It can decrease, but it does not increase. So no, your premiums are not going to increase. If you're talking to somebody that is talking about that, then they don't know, they're not talking about whole life, or they don't know what they're talking about. The company will collapse. Oh my goodness. Everybody's like, what is the biggest risk? Are these companies stable? Have the companies been around forever? These companies have been around for 150 to 200 years. These companies can they collapse? Absolutely. Is it a risk? Yes, it's a very small risk. It's a much smaller risk than what your banks are going to have. If you have money in a bank, look at all the banks that have gone out of business in the last year or the last 2 years since COVID. It's been an enormous amount of bank issues. And we've had that in history, just tons and tons of people going out of business with banks. And so, or banks going out of business. And so the insurance company going out of business is not nearly as risky as a bank. Typically, what happens if a life insurance company is not doing well financially, a bigger company will come in and buy them out. If they get bought out, everything just kind of keeps rolling along. They might go from a mutual company to a stock company. If that happens, then of course you're likely not going to get dividends and all the other things. But at the end of the day, that is a very, very small risk. Is it a risk? Yes, very small. All right. Whole life has a lot of expenses. Oh, I hear this one a lot. And I hear this a lot from clients that have other agents or family members that have heard this and they're just repeating it. A lot of these myths, if you have not recognized this theme already, a lot of these myths are just people spouting stuff that they've heard and they're not educated. And so the fact that whole life has a lot of expenses, does whole life have expenses? Yes, there's cost of insurance in there. There's load fees. Those things are expenses. What they don't have are administrative expenses and all these other things that universal life has tied to the market. They have the guarantees of the set price for those expenses. So for people to say, well, whole life has a lot of expenses. Everything in the life insurance world has expenses. Why they think it's more, I have no idea. I don't get it if they're just truly not understanding. Because let's just take cost of insurance, for example. If it's whole life or if it's universal life or variable life or whatever, not term insurance. We're not going to look at term insurance. But if we take any permanent product, the insurance company underwrote you, meaning they looked at medical records, they did blood, height, weight, urine. You answered all medical questions on the application. They pulled driver's records. They've done all of that stuff. Based on all of the risk factors, the insurance company knows fairly well when you are likely to pass. So, do you think that it matters what they pay or what you pay for cost of insurance, regardless what permanent product that is? So if you have whole life and you're likely to die at 92 versus universal life and you're likely to die at 92, it's not going to matter. The insurance company at the end of the day has to look to say, okay, when are you likely to pass? That is how we are going to adequately charge you for your cost of insurance. The difference in premium, which is why people think whole life is so expensive, is because the difference in premium with all the other products are based on some sort of rate of return of the market. Or they have said, oh, your cost of insurance will be lower, but it goes up over time. It's not set. In whole life, it's all set. It's all guaranteed. There's no market return. You're paying for that out of pocket. And so they don't work the same. And so people tend to think, well, because one is priced less than the other, there are less fees and charges. That is not true. In fact, I had a potential client visit with me last week, and she was talking about the fact that they had a guaranteed universal life policy. And this is so crazy to me that I'll probably do an entire podcast on just this whole thing. But she had a guaranteed universal life policy. The agent switched it to an indexed universal life and then told her whole life was too expensive. Now we went from a guaranteed UL product that wasn't fantastic to a ungodly, awful IUL that has zero guarantees in it. Zero guarantees. Shows it collapsing by the time dad is 92. Like, this is just not an absolutely fantastic scenario, but he says whole life is too expensive. No, whole life would have been there his whole life. And so why are you switching it from one product to another? That doesn't even make sense to me. Outside of maybe you want some commission, but you're not saving anything when we're using it for estate planning. So, people just do not understand the fees and charges, and they think whole life is too expensive when in fact, let's look at the cost per dollar of death benefit. Which one is going to be cheaper? It's really that simple. Even if you go to the cost per dollar of death benefit, term is more expensive than whole life. Cost per dollar of death benefit, not out of pocket premium. What did I pay out of pocket? Totaled up, divide that by my death benefit. Term insurance stays the same, it stays level. So the cost per dollar is actually more expensive than if we were to buy whole life over our entire lifetime. All right. And then myth number 25 is that any agent can understand the infinite banking concept. So I can just go buy a life insurance policy from any agent. You guys have heard me rant and rave about this a bazillion times, but this example is just it just sets true almost weekly for me because I just saw somebody, he posted on my Instagram, I think, and he called me a not so nice name. Anyway, he was mad because when he went to make his appointment, we were asking if he read the book. And he got pissed off thinking, oh, well, she just wants to sell books. So he said, go listen to her podcast. She'll learn everything there. And then just go find another agent. Well, I'm super, super excited that the guy threw my book in the garbage and went to another agent because not somebody I want to work with, right? But we're asking if you've read the book because if you come to me and you haven't read the book, I know you haven't read the book. We're not here to sell you something. We're here to teach you something. And when you have all these, and you've got all these clients that have questions about how to use it, we're here to teach. We're here to meet with people. I don't care if my clients meet with me monthly. Talk to me. What's going on? How are you using the policy? What do you need help with for strategies? Because as I said in another myth, the IBC is not a policy. It is a thought process around money. And so you can go find another agent to write a policy for you. It's probably not going to be right. But are they also going to be able to help you use that policy? It's really quite ironic to me that so many agents across the country buy my books that are not associated with me, obviously. All these agents are buying my books. They're giving them to their clients, and then their clients are coming to me and saying, yeah, but he didn't know. Like, they didn't ask me an hour and a half worth of questions. They didn't ask about estate planning. They didn't ask about what we're doing, what our goals were, any of that kind of stuff. And so we have a pretty intense first meeting. And yeah, it's free, but I need to understand if we can even get started, if it makes sense or not. And so we can go from there. But not any agent can do that. There are agents even within the IBC community that are authorized practitioners that I come across that should not be dealing with farmers. And that is not me wanting to be mean and cut down my colleagues because I absolutely love them. But guess what? If I have a doctor come to me, I'm probably not going to do a good job of helping that physician because I don't work with physicians on a daily basis. I don't understand a lot of what they have set up in their plans. And I have tried to help them and I have failed. So going forward, I would call in help. And so I just came across this again last week. Somebody needed help with a farmer. They didn't know squat about farming. And so they were not helping that client. They didn't want to give up commission, so they helped the client. But in the end of the day, they're not helping that client. And there was obviously, I can guarantee you, there was no talk about estate planning. There was no talk about key man, buy, sell policies. Like that is stuff that we talk about all the time because it is part of the infinite banking concept. And when people say, well, can I use it for this? Can I use it for that? Yes, it's infinite. And I did that. We talked about that on my last podcast. It is absolutely infinite, the reasons that you can use these policies. But if you're not working with a practitioner, how do you know that? How do you just have a policy? How do you know when you're supposed to get another policy? How do you know that that policy is structured correctly for your needs? How do you know that it's with a good company? Right? How do you know any of those things if you are just working with a salesman and not somebody that's willing and wanting to teach? So, no, you can't just work with anybody. I mean, you can if you want. Your results are going to be very, very different. Okay, guys, that is 21 to 25. Let me know if you have more questions, comments. Maybe you've come across a myth that, or you have a question that actually ends up being a myth. I want to know what those are. You can email me, maryjo@withoutthebank.com, or you can leave me a message on themjhotline.com, and I am happy to answer any of those. All right, you have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.